and gone. What exactly are you seeing that should happen to the economy because of the restructuring of the debt?
Okay. Good morning, Samson, and I hope you can hear me very well.
Yes, please.
And yeah, it's always a pleasure to be here. I think before we answer that question, it's important to understand, or maybe for the purposes of our listeners, why the restructuring took place. And then we can then look at, what effect that has for the economy. And I think I gave a couple of material to your producers to put on the screen for our listeners. But I mean, we've had 3 levels of restructuring over the last 18 months. We started with the domestic debt exchange. And if you looked at the total composition of our public debt by creditor category, almost about 52%, right? So half of that was comprised of the domestic debt. And there were issues in there more or less to do with the extent of the borrowing and the interest, and the government had to do something about it. And that was a very, very, very painful exercise. And we've been here on this platform many times where we even saw pensioners at one point picketing at the Ministry of Finance over some of the potential, quote unquote, haircut or losses that they were going to suffer. Then you had the second aspect of it, which was the external bilateral debt restructuring. So this is Ghana and the likes of the Paris Club members that we owe, right? And that bilateral restructuring took place and was completed in June, early June, actually, of this year, although we got the initial agreement or agreement in principle in January of this year. The third bit, which was the most, or was going to be the most difficult, was going to be the external commercial debt restructuring, so the Eurobonds. And we knew that the Eurobonds were about 13 billion out of a total of about 20 billion, right, that was available to restructure under that. And to the extent that that actually has now been completed together with the other two. And this was the biggest albatross, more or less, around the neck of the economy in proverbial terms. Then it actually gives us, in my view, a good cause to now think about how we grow the economy going forward. So the restructuring of the debt is actually quite significant and very substantial, in my view. And I think, given the difficult, painful 2 years that we've had, the prospects going forward actually is quite, good for the economy as a whole. It won't happen overnight, as some of my, the MPP or the Minister of Finance is saying about watching the CD to the dollar and all of that. But again, it's important, if you look at the next slide, what exactly we've gotten through this debt deal, and then I'll come to what it means, right? So with the bilateral creditors, we had to forego almost about, the effective nominal haircut is about 38%, right? So 5 billion, about 38%. So basically what the bilateral creditors got is about 62 cents on the dollar. Then in April, when the original proposal to the commercial creditors went through, the proposal was about 71 cents to the dollar. And then they said that it did not meet the debt comparability treatment threshold. So we have to go back and rework the numbers. And the numbers that have come through, more or less, is now closer to what the bilateral creditors offered. So basically about 36, 38 cents on the dollar. And that means that we are having to forego over the next 3 years in terms of the interest and the principal repayments that we would have had to make, almost about 4.4 or 4.7 billion dollars that we would have had to find money for that, no longer is going to be the case. So you're actually getting some form of debt forgiveness, and then going forward, the debt itself, so the remaining bit that then has been restructured, you look at the coupon structure on those debt, you actually, instead of an average of about 7.5% before the restructuring, now you're looking at about 5% or so. So again, that creates some potential savings cost for the government for the restructuring. So these are, for me, it's important. And it's also important because you look at the economic numbers, and the turnaround within the economy in the last few months is largely been positive. So we saw the numbers that came through from the statistical service. You're still talking 4% quarter-on-quarter growth in real terms. We've also seen just yesterday the IMF announcement of the completion of the second review, which is largely good. And we've even announced some deal with the independent power producers to restructure their debt. So the positive aspect then of it is that this would unlock more financial resources for us or for the country through the interest and the principal write-offs that we're getting, right? And the deferred repayments, but also the additional multinational financing that would come through for us as a country. What effect would that have on the dollar, on growth and the CD and things like that? I think immediately, of course, you see a bit of a show up on the reserves of the central bank with the release of the 360 million. But I think it's going to take a little bit longer for us to actually see that dramatically affect growth as within the timelines that the finance minister is talking about. So I'm a little bit skeptical in terms of the bullish sentiment that the finance minister expresses, but definitely the indicators have begun to turn in the right direction. We can do a lot more to support that, like on inflation and other things. And then I think we'll come to the other point that I talk about, where for me this agreement is not enough. The external commercial debt that we've done, and then the other one, it is not enough to guarantee any long-term fiscal sustainability. In other words, it would not curb the pace of borrowing and the fiscal recklessness for a number of reasons. And it's important we address that, because as we're already talking about the 4.4 billion potential deferment or debt reprieve that we're getting, the government is already talking there are two news stories on this. You can go on my Joe Online and then on the Ministry of Finance's website about getting $2 billion from the Koreans, and then another $1.7 billion from Afri-Exim Bank for SMEs and infrastructure and other projects, right? Together, this is 3.7 billion if they materialize. And that is almost going to be as much as the savings that we're making over the next 3 years under the commercial debt restructuring. So the 4.4 billion in there, right? So in one sense, you restructure the debt to GDP may come down, but it actually would not, because little have we concluded this that we're already thinking about going, for the next round of borrowing in that sense. And that's what gives me a little bit of a cause, for worry. And I'm sure we can come back later to what do we do to actually curb then the recklessness that we see. And
Right.
I have 4 proposals on that.
Right. When we say, help my audience to appreciate, when we say savings have been made, in the domestic debt exchange, we are supposed to have saved 61 billion Ghana cedis. Then the bilateral debts, we are supposed to have saved $2 billion US. And then this one, commercial debt, 4.7 billion US. What does it mean to say we have made savings for which we should be celebrating?
So from a macro fiscal point of view, this is money that you would have had to find to pay the interest and or the principal that is owed, right? The people that you owe. So to the extent that you now actually come in and the people say, well, don't pay all of it or pay some, and even on the interest that is owed, we've actually brought down the interest from a certain percentage. So in the case of the commercial, you're talking an average of about 7.5% to around 5%. You're making a 2.5% of 250 basis points, right? Net difference in that. So basically, in simple terms, is money that the government would have had to find, right? Either borrow more to reservice those old loans, or in extreme circumstances, even print money, right, to service that loan, but actually will end up causing inflation. And this is what it means. It doesn't mean necessarily that the money was there or the government actually had the money there. So if you look at the budget, we make provision for interest payments. So in the 2024 budget, I think in paragraph 376 or 78, we made provision for $56 billion, right, of our expenditure for just interest payments alone under the accrual accounting rules.
It
But
does
it
not.
does not mean that the government puts $56 billion there to actually use that to service the loan facility. But to the extent that they no longer have to get this money or print this money or borrow more to do that, then that, from a point of view of the government,
Help me again, Doc. 4.7 billion US dollars on the commercial debts. Is that
Yep.
is that forgiveness? Is it like some, HIPIC blessing we have gotten? So that debt is wiped off?
Yeah, so an element of the debt has been wiped off. So the haircut that the commercial creditors have taken
37%?
38%.
Okay.
Right? In other words, for every 1 CD, assuming that they owe, the $1 that they owe, they're getting back about 64 pesos or 64 cents.
Right.
Yeah, that is how it works out.
Just as happened in the domestic debt exchange program.
Yes, similar thing with the domestic debt exchange, except that, of course, with the domestic debt exchange, what then happened was not on the principal, but the interest bit that was restructured. So
yes, but people have lost, in the domestic debt exchange, people have lost 61 billion of their money, or they have given it as a dash to the government.
Yes, of interest that they would have earned from giving their money to the government, they did not get that.
Right.
And they will be getting some new interest with the 4 bonds that were offered under the domestic debt exchange. And then in this new one, the commercial restructuring, you also have both the cut on interest as well as principal, right? And then you have potentially the extension of the maturity or the duration of these bonds. So if you actually work out the key metric in all of this is the net present value of the nominal debt that you owe. So basically, in simple terms, if you were to take all of the cash flows over the period of 20, 30 years that you owe the money, and you brought it forward or discounted it forward, what would that be worth? Quickly on that, if you look at the bilateral, it was 5 billion. The NPV after restructuring is around 3.2 billion. If you look at the commercial, it's 13 billion that we owe. If you work the numbers as I have done, you're looking at an NPV of around $7.4 billion. So effectively, you're getting, 64 cents on the dollar from an investor.
Let me get to Dr. Frank.